Is the market overheated and about to cool down, or is it just another healthy dip before continuation? That's what we're going to talk about today, because while retail is either overly bullish or full panic mode, smart money is positioning differently. And you need to understand the bigger picture before making your next move in crypto or the stock market. Let's break it all down. Some of the biggest signs that you would see right now if you're actually trading, as I'm a trader since more than 8 years now, on the charts on a daily basis, if it's stocks, crypto, meme coins, NFTs, commodities, if it's short-term, long-term trading, I do it all. And what I definitely see is that the markets are turning into a recession. And the reason for that is basically we have a lot of fundamental bullish news. Trump coming into presidency, him coming up with a lot of crypto orders in the sense of making it easier, simply explained, for crypto in the future when it comes to regulation, when it comes to the first order that he did now with crypto, which is a big one, which we talked about, and that is the order that Bitcoin, Ethereum, Solana, and so on, some of these coins are basically a reserve currency for the US. They didn't buy new cryptocurrencies, but they are converting the ones that they already have gotten from any criminal activities that the government itself is holding. They're using as a reserve currency. So there's a lot of very positive news, but despite that, the market are not showing any real bullish signs. We had a classical buy the news and then sell the event when Trump came into presidency, because the day he was elected, the markets, especially the crypto markets, but every other market in general, started to pump a lot. But afterwards, once he came into presidency in January, what happened is that the markets pretty much crashed, or basically slowly are crashing. Now, the craziest thing about that is that I truly believe, and I also have said it, and I will put the link below in another video, that I truly believe this is all planned from Trump itself, with the tariffs, playing around with the tariffs, like calling the tariffs out, calling them back, increasing and decreasing all the time the percentages that he is imposing these tariffs on different countries. And what actually happens is that the market is cooling down because the market is in fear. Therefore, instead of Trump coming into the presidency and crashing the market, what is actually happening is that he's step by step taking the markets lower and down to then pump them up again. But that's what we then call a recession. And the biggest reasons why we could run into a recession right now, and why it looks like on chart, but also fundamentally that we are running into a recession, are basically the interest rates. The interest rates are pretty high. Therefore, lending money is very, very difficult. So you just pay more percentages to lend money. Therefore, if there's less money in an economy, less money is being put into the economy itself, right? So it's kind of like, imagine you work and you get your salary. And now there's a new president, or there's a new decision, or there's a fundamental decision, let's say, of your boss, that he pays you less percentage on your job, and this percentage changes. Sometimes it's 4%, 3%, 5%. So you are getting less money. But not only that, on top of that, that second big indicator for us that we are running into a recession is basically inflation. Inflation is eating up your money. That means the money that you're getting, after even getting less now with the interest rate, let's say 5%, so you're getting 5% less money. Now also inflation is eating your money, so your money is worth less. Like, let's say, for example, your salary was $2,000. Now you're getting 1.8 because of the percentages, just an example. And now on top of that, that 1.8K US dollar is not worth 1.8, it's worth 1.4. So now actually, of your 2,000 salary in the beginning, now you have $1,400 buying power left. Therefore, you have less money, therefore less money is going into the economy. And you need to understand this on a very bigger scale. I just made a very simple breakdown so you understand how basically these percentages and inflation will hit people, but you have to see it in a scale of a whole economy. That means they have less money. On the other side, we have a lot of debt pressure, right? All of the countries are increasing debt. Just Germany recently, I just came from Germany, they're increasing their debt, right? It means they allow now to take more money, so trillions and trillions of euros are going to be printed, and this debt at the end of the day increases the probability that we are running into a recession, because we are having too many negative indicators in total. Therefore, money printing also started to go higher. You just see it in the M2 chart. So if you go into the money printing chart of the US dollar, we dipped very low after COVID, right? So less money was printed. Now we are printing more money, and that therefore we are increasing inflation on a higher scale, right? So inflation, interest rates, debt of countries, right? And people being like in a fearful situation right now, like especially investors, they don't really know if markets are going up or down. No one is posting videos anymore. The crypto YouTubers are not talking about the markets anymore, because everyone is just waiting to see what is happening. And confusion always causes stagnation, and we are in a stagnation. And before stagnation, right, will lead into a recession normally, and after a recession a lot of money comes in again and we pump up the market again. So not only on the chart but also fundamentally, news-wise, and let's say all of the monetary policies that countries are driving right now, inflation, high interest rates for lending money in that sense, right? Taking on more debt, printing more money can be positive, but at the same time, even though interest rate is used to lower inflation at the end of the day, inflation is still spiking, so they're not really getting it under control. Therefore, we are pretty much running into a recession. These are some of the markers. There's many more, but especially if you are very experienced in the market as I am, you kind of feel when the market is very low. There's no volume. It's kind of like we speak about bull and bear market, right? Bull market is when the market goes up, bear market is when the market goes down. But what we are seeing right now is an environment of like a kangaroo market, right? We are jumping up but back down again, jumping up but back down again. So we're not really going anywhere. We're staying sideways or even negative, which is still possible to be very profitable. I mean, I'm still making a lot of money with crypto trades, still making a lot of money with trading Forex, especially this week was an insanely good week because we have very good news. But in general, there's still possibilities, but it's a more difficult environment and you need to be obviously careful. So when we speak about especially this market reset, so what comes after the recession in that sense, and I truly believe that we're going to see this recession still this year. I'm not saying most likely that's going to be a long recession, but the markets need to cool off. Every top trader, everyone that I speak about, everyone knows that. Everyone has that in their feeling. S&P 500 is too high, the DAX is too high, the indices, the stock market, everything is completely overheated, and therefore for a natural good continuation in the market, a healthy market, we need a correction, right? Corrections are very positive, but recessions are not so positive because it means after the market corrects, we kind of stay there because people are fearful, they don't want to invest, they don't want to put money, it's too expensive to lend money. And I hope this phase will be cut into half very fast because recessions sometimes can take years. My first recession, I was still very young. My mom had a job and then she was laid off because in 2008 we had a very strong recession. You might maybe remember. Obviously I was not trading at that time, right? But still it was a very interesting time to see how the whole mood, the economy changes. Everyone is getting laid off, no one is like working, everything is like, you know, more expensive. So that was the first time I saw what a recession is. But the beautiful thing is a reset we saw the last time after C19 or while C19, right? While C19 we had a 30 to 50% correction in the majors like S&P, crypto and so on. But afterwards we came back very fast because all of the government started to print more money. So M2 supply increased, money supply increased a lot. Therefore a lot of money came into the market and we had a very heavy bull run. We went with Bitcoin to 69,000 and above, an insane new all-time high. That was my first very strong bull run. First time I made multiple six figures in investing, just in investing, not trading, but investing. It was amazing, right? So these, let's say, resets, they help the market to come back up. And I truly said it. I will put the link below. I said it on X. My theory again is that Trump is causing this crash, not really the crash, but let's say like a step-by-step cool down of the market. It's like kind of walking down stairs, right? That's what Trump is doing. He's taking the market down like stairs, not like just directly. And afterwards they will pump it up. Therefore, Trump is preparing, and he already did, with making crypto a currency reserve, with allowing all of these things. Also broker regulations. I've been speaking to a lot of people in the broker world. The US is opening up for more brokers, for more money. So they are definitely fundamentally doing the right things, but the markets are not ready yet. They need to correct first, and afterwards the market will pump insanely, and Trump will walk out as the big G because he's the one that orchestrated all of this. So I truly believe it's an insanely smart move, and you have to see through all the BS, you have to see through all the fear. Markets correcting is good, is normal, needs to happen for us to go to higher level, because you need to understand how I always explain my students in the market how to explain corrections or like resets. It's very important because the lower the prices, the more people want to buy. Let's say you go to a shop and you want to buy watermelon, stupid example, but let's say you want to buy watermelon and the watermelon is at $5 per watermelon. You're going to say like, I'm not going to buy this. It's too expensive. It makes no sense. So you're going to wait until price comes down. You're not investing. You're just sitting there. You're waiting. Once price comes down due to a watermelon crash, let's say the news, the fundamentals, the government, the people, the market is just too high. People are not, there's no demand, right? There's a lot of supply, but there's no demand. And if there's a lot of supply, but no demand, there's two things you can do. You can make the product better or you can decrease the price. Therefore, for watermelons, you need to decrease the price. Now people are buying because we have lower, we have lower prices. What do people do out of the fear of watermelons going back to $5 per watermelon? They will buy more than they actually need. So when prices drop, people will buy and keep them at home, like they will put a reserve. And that's the same with investing. When prices are too high, no one is getting in. When it drops low, everyone is going in like crazy because they want to put more aside than they actually really need. So people start to lend money. Therefore, if lending money is cheaper again, all of this money goes back into the market and we see an insane pump. Therefore, a reset is healthy. A reset is what we need, because to get liquidity in, we need to offer people that want something at a certain price a better price. That's the same in the real estate market. All of the markets work like that. So resets are important, and that's how resets look like. So resets are important for you to put money aside. I did something that I can give you as an advice right now. Of everything that I earn besides investing, just everything that comes in as a cash flow, 20% of that I put aside in USDT and USDC. Means I have cash once the reset happens. I have a lot of cash reserves, and then I can get a cheaper Bitcoin, I can get a cheaper Ethereum, I can get cheaper commodities, I can get cheaper real estate, right? Because resets are these times when you need to get in at the end of the day. What do I consider a reset in percentile? It's 50%. 50% for me is a reset. Afterwards, probably lower. So sum it up, we're gonna slowly, like a staircase, go down 50%. Then we're probably gonna see a little bit of a recession. So we're gonna go sideways, nothing is happening, everyone is frustrated. And from there on, we're gonna pump it up. And once we hit this 50% correction in the market, S&P, crypto, and so on, that's where I'm gonna buy heavily, because I don't really care if we're gonna go lower 10% or whatever, because what is gonna come is 125K Bitcoin, an 8K Ethereum, a 480 US dollar Solana, right? Gold at 3,000 to 4,000. So there's a lot of potential, but we just need to be a little bit patient. I truly believe that this next correction is insanely important for the next phase of growth. As I just explained, at the end of the day, if prices are too high, people are not buying, we need the markets to come down, we need fear to drive this market down, we need news and let's say fundamental decisions from the government, like Trump is doing it with tariffs, for the market to come down. That's completely normal, because after these markets come down, then we can pump them up again. But like, it's always like that. It will always stay the same. The markets will never change, because it's a made man thing. And as long as there's no really big breakthrough, maybe in the future with AI, this will happen. But until then, markets will always be cycles, and the cycles always buy when there's blood on the street and sell when everyone is happy in the street, right? And when everyone is in a fear, everyone is losing their job, people are not getting credits anymore, credits are basically crashing, mortgages cannot be paid anymore, real estate crashes, all of these things happen, is when everyone is in fear, no one has money. But the people that are smart like us, right? That's why you're watching this video, because you now learned put money aside for this very time, because then you can buy things for very low prices. Everything will be at a sale. And therefore you will wait 2 years, 3 years for the cycle to go up again, all-time high, everyone is happy, right? People come back and they say the markets are good. That's when you sell. It's always the same at the end of the day. You just need to follow that. You don't even need to be a good trader on chart. You can just listen to people, listen to their conversations. What are they talking about? If they say the markets are shit, if they are scared, if they are selling, that's when you buy. And when they speak about the markets being so crazy and they made so much profit and they want to buy more even though the price is already high, that's when you sell. You don't need to be a trader on the chart to understand that, right? And that's true. Most traders and investors, they will say this is at the end of the day how it works. And I have taken a lot of very good profits. XRP is an example. I bought XRP at 16 cents. I sold XRP now at, I don't even know what the price was, but it was the highest point. Maybe I missed 1 or 2%, and XRP was my biggest position. Why did I buy XRP? Because XRP had a lawsuit a couple of years ago. Everyone was fearful and sold XRP. I bought XRP. Now when people start to speak about I want to buy XRP, XRP is going to go to $10, I sell it XRP. On top of that, with technical analysis, it's a perfect entry and a perfect exit, but I'm just giving you the point. If you don't know how to trade technically, then you can just listen to what people say. The crypto market is behaving currently basically the same as every other traditional market. It's kind of crazy. I've talked to a very good trader and friend of mine. He's an asset manager, very, very young guy. Max, shout outs to you, bro. It was nice meeting you in Dubai. And he manages his family fund. And he said, Miguel, check it out, because Japanese yen kind of correlates with Bitcoin. Every time Japanese yen increases, Bitcoin increases. Every time it reverses, Bitcoin reverses. So it's kind of interesting. I still need to check their theory, but no, crypto is behaving basically the same as every other market right now. now because they're still too linked, right? Because it's institutionalized money. The only part of crypto that is not moving like every other market is meme coins, right? Meme coins and very small cap coins. Meme coins, for example, in the last couple of weeks saw an insane pump after they completely crashed 90%, even though everything else is crashing. But that's just like pure emotional decision. That's like market psychology. You understand that if people are losing money everywhere, where will they start to gamble? They will start to gamble on meme coins again. So every time markets get very difficult, meme coins seem to increase, and every time markets get too easy, meme coins seem to crash. And that's because people are moving the money out into main coins, Ethereum, altcoins, layer 2, and so on. And then when these don't perform, or nothing is happening, or everyone is fearful, like right now, market tends to go to the degenerative side of trading again, which is meme coins. So you kind of just need to understand the flows. I'm not judging meme coins or anything. You cannot judge a market, and you should not judge a market, because the market is the market, and either you make money or you don't. That's what counts at the end of the day. So I rather focus on that, and I look where the volume is, and the volume right now seems to be in meme coins. That's why I'm back in meme coins. I have a very profitable trade right now running in Popcat, which is a meme coin that basically crashed 90-95%, SPX 6900, a meme coin that I've spoken multiple times. I sent out trades on it. I've many times told to people if they want to invest into it, they should maybe consider it. Obviously, I'm not an investment advisor, but a professional trader and investor, and I'm buying it, right? And it made 130% while everyone is losing money. So there is a reason for that, right? And now you probably understand the reason better. Mainly what a true cooling off, or let's say like a reset, would mean for markets like Bitcoin, Ethereum, and so on. I truly believe that Bitcoin obviously can go lower and should go lower to the 50% correction. So if you would go on chart right now and you take a Fibonacci tool from the lowest point to the highest point, then the 50% correction is the target for Bitcoin, and it's beautiful. For Ethereum, it's a little bit more difficult because Ethereum hasn't moved since 1 year. If you go back to 1 year, Ethereum price is at the same, so it didn't perform anyhow. But it's very stable, and I don't think there's going to be a lot of sell-offs in Ethereum. We could see the 1,700, 1,500 Ethereum. But for Ethereum speaking, it's a little bit more difficult to say because we are still in a buying zone. We finished a bearish sequence, so nothing is really happening, and there should not really happen anything. Obviously, we can always go lower, but there's not so much reason. For Bitcoin, there's more reason. I think Ethereum and Solana will stay pretty untouched. Maybe Solana will pump meme coins, and then Solana again, and then Ethereum again. And we will have not like a complete, let's say, depression and recession. We won't see any movement. We will see movements. We will see movements like 5, 10, 15%. And then if you leverage them with a 5 or 10x, they are still 100, 200, 300%. So you can still trade the markets. But the times where you just put money in a coin and you watch it for a year and it makes 500x, these times are over. You need the skill of trading now. The markets are way more difficult. The time, and I always say it, the moment the institutions stepped into the market are moving like institutionalized markets, therefore like Forex. And for Forex, you cannot just buy and hold. You need to understand the markets, and you need to have a trading system, and you need to be on top of the game. And most people that might be profitable in crypto, they will never be profitable in Forex trading because it's a completely different world. They will be obliterated. So I'm very happy that I first learned Forex trading last 8 years, and I came into crypto 6 years ago. So I have the experience of the Forex markets and the experience of the crypto market, and I still remember how easy the crypto market was 4 or 5 years ago, and I still remember how difficult the Forex market still is, and the markets are basically the same. And with the same skill overlapping now, you can still be very profitable. Whether we are heading for a full-blown recession or just a temporary reset, one thing is for sure, the market is shifting, and if you keep playing by the old rules, you'll lose. This is the time to zoom out, get smarter, and position yourself with what's coming. So let me know in the comments, do you think we're heading into a recession or just cooling off before we have the next run? Hit subscribe to stay ahead of this market, and I'll see you in the next one.